Samsara is trading right now at $31.96 per share as of 11:08 a.m. Eastern Time on Friday, January 23, 2026. We are seeing a slight intraday slide of 0.36%, which on the surface looks like a typical quiet Friday for a high-growth software name. But if you look under the hood, there is a massive gap widening between what the market expects from this IoT leader and the reality of how the internal players are positioning themselves. Most investors are looking at the 52-week high of nearly $62 and wondering if this 50% haircut is the ultimate discount for a company that effectively owns the data layer for physical operations. The expectation is that Samsara is an unstoppable machine in the industrial digitization space, but the reality is that we are witnessing one of the most aggressive periods of insider selling in the company's recent history. Just this week, co-founders Sanjit Biswas and John Bickett offloaded shares worth millions of dollars, following a pattern that has seen tens of millions in equity leave the building, while retail investors are being told by Wall Street analysts that the stock has a $50 price target. This creates a fascinating tension because while the business fundamentals are hitting record milestones in revenue and customer count, the people who know the company best are hitting the exit button at a rapid pace. If you are holding this stock or thinking about jumping in, you need to understand that Samsara is currently a battleground between high-conviction institutional bulls and skeptical short sellers who are betting on a valuation reset. The company recently reported its third quarter results for fiscal 2026, showing revenue of $416 million, which was a significant beat over analyst estimates. They also showed a surprise flip to a positive net income of $7.77 million, a massive jump compared to the losses they were posting just a year ago. On paper, this is exactly what you want to see from a maturing tech company. They are scaling revenue at nearly 30%, while finally proving that the business model can actually generate a profit. However, the market is currently punishing the stock, and it is sitting just cents above its 52-week low of $31.25. This is the curiosity loop you have to solve. Why is a company that is beating earnings and raising guidance trading at yearly lows? It comes down to the discrepancy between non-GAAP adjusted figures and the raw GAAP reality, combined with a macro environment that is no longer willing to pay a massive premium for growth if that growth is accompanied by heavy insider liquidation. Comment below how many shares of Samsara you currently hold and what your average cost basis is right now. Do you think the co-founder selling millions is a major light flag, or are they just diversifying after years of building the company? The short selling data on Samsara is where things get truly interesting. Current short interest is sitting at approximately 6.88% of the float, which doesn't scream short squeeze candidate at first glance. But when you look at the off-exchange short volume, the story changes. We recently saw the off-exchange short volume ratio spike to a staggering 70%. This means a huge portion of the daily trading activity is being driven by short positions that aren't necessarily visible on the main tape. Short sellers are likely looking at the forward price to sales multiple, which is still hovering around 10 to 11 times. In a market where traditional software is being reevaluated for its durability in an AI-first world, a 10-time sales multiple is a high bar to clear. The short thesis here isn't that Samsara is a bad company, but rather that it is an expensive one in a high-interest rate environment where every penny of spending is being scrutinized by their enterprise customers. Institutional ownership remains high at over 90%, but we are starting to see some of the heavy hitters like Sands Capital Management and other major funds trimming their positions, or at least standing still while the retail crowd tries to catch the falling knife.
For those of you looking for actionable insights on the short side, you need to keep a close eye on the borrow rates and days to cover. Currently, the borrow rate is relatively low at 0.41%, which suggests that there is still plenty of stock available for short sellers to use. If you see that borrow rate start to creep up toward 2 or 3%, it would indicate that the easy short positions are filled and the pressure is mounting. The days to cover is sitting at 3.25, which is high enough to cause a violent move upward if a positive catalyst hits, but not high enough to guarantee a squeeze. The retail sentiment on platforms like Reddit and X is deeply divided. Some see the $32 level as a generational entry point for a company that is the Palantir of the physical world, while others are calling out the persistent executive selling as a sign that the bottom isn't in yet. To understand where we go from here, we have to look at what Samsara actually does. They provide a connected operations platform that uses IoT sensors and AI-powered cameras to help companies manage fleets, construction sites, and warehouses. Their pitch is simple. They save companies money by reducing accidents, cutting fuel costs, and preventing equipment theft. This is a sticky business model because once a company installs Samsara hardware across thousands of trucks, they are unlikely to rip it out for a competitor. This is why their annual recurring revenue, or ARR, is so high, recently reaching $1.75 billion. They are serving huge names like 7-Eleven and the Dallas-Fort Worth Airport. This isn't a speculative startup, it is a critical infrastructure provider for the real economy. They have a massive dataset from over 90 billion miles driven by their customers, which they are now using to train AI models for predictive maintenance and safety culture. The expectation for 2026 was that this would be the year of divergence, where AI-capable software companies would pull away from the pack. Samsara is trying to position itself in that winning category. They recently released a year-in-review report showing that their customers saw a 73% reduction in crash rates. This is a powerful ROI story that helps them close deals even when corporate budgets are tight. However, the reality is that the competition is heating up. Established players like Trimble and Verizon Connect are fighting for the same fleet management dollars, while industrial giants like Honeywell are looking to expand their own IoT footprints. Samsara has to spend a lot on sales and marketing to maintain its 30% growth rate, and that spending is what keeps their GAAP margins thin. As we look toward the future, the bull case depends on Samsara's ability to expand beyond just trucks and cameras. They are pushing hard into asset tags and international markets, particularly Europe. If they can continue to grow their large customer count, those paying over $100,000 a year at the current 35% clip, they will eventually grow into their valuation. But the risk is that the market continues to derate high-multiple software stocks. We have seen a steady downtrend since December, with the stock falling from the mid-40s to the low 30s. Technically, there was a hammer pattern formed earlier this month, which often suggests a bottom is near, but that hasn't led to a sustained recovery yet. The stock is currently fighting to stay above the $31 mark, which many see as the final line of defense before a potential drop into the 20s. Retail investors should be looking for a stabilization in the short volume ratio and a pause in insider selling as signals that the coast is clear. When the CEO and CTO are selling nearly $10 million worth of stock each in a single week, it creates a psychological ceiling that is hard for the market to break through. You have to ask yourself, if the co-founders don't think $32 is too cheap to sell, why should you think it's too cheap to buy? On the flip side, analysts at TD Cowen and KeyBank are maintaining their outperform ratings, arguing that the long-term potential in the $45 trillion physical operations industry is too big to ignore. They see the current price as a temporary disconnect between short-term sentiment and long-term value. What's your take on the rising short interest and the high off-exchange value? Do you think this is smart money correctly identifying an overvalued stock, or is it manipulation designed to shake out retail before a big move? Comment your thoughts below.
Summarizing the situation, we have a company that is doing everything right on the operational side, beating revenue, turning a profit, and expanding its customer base. But it's doing it in a market that is deeply skeptical of its price tag. The contrast between the expectation of an AI-driven breakout and the reality of a stock pinned at its lows is the defining feature of Samsara right now. If the $31 level holds, we could see a powerful relief rally as shorts cover. But if the insider selling continues and the macro environment worsens, that $50 price target from Wall Street might remain a distant dream for a long time. Investors need to be disciplined here. Watch the options flow and the institutional filings closely. If we see a major fund start to build a new position at these levels, that will be the real signal that the bottom's in. Until then, the shorts seem to have the upper hand, and the heavy insider selling provides them with all the ammunition they need to keep the pressure on. In conclusion, Samsara is a high-quality business with a valuation problem. The operational success is real, but so is the technical damage to the stock chart. The tension between the company's impressive ROI for customers and the executives' willingness to liquidate their own holdings is the central puzzle for every investor to solve. Keep an eye on the 31.25 support level. A break below that could trigger a new wave of algorithmic selling that disregards the fundamentals entirely. On the other hand, if the company can deliver another blowout quarter with even better GAAP margins, we might finally see the divergence that the bulls have been waiting for. Would you like me to perform a deep dive comparison between Samsara and its main competitor Trimble to see which one offers a better valuation in this current market?